Ladies and gentlemen, good day and welcome to the Eldeco Housing and Industries Limited Q2 FY22 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star, then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Lokesh Parekh from Christensen Advisory. Thank you, and over to you, sir.
Thank you, Melissa. Good afternoon to all the participants on this call. Before we proceed to the call, let me remind you that the discussion may contain forward-looking statements that may involve known or unknown risks, uncertainties, and other factors. It must be viewed in conjunction with our business risks that could cause future result performance or achievement to differ significantly from what it expressed or implied by such forward-looking statements. To take us through the results and answer your questions today, we have the senior management of Eldeco Housing and Industries Limited, presented by Mr. Pankaj Bajaj, CMD, and Mr. Anil Kumar Dhadha, Group CFO. We will start the call with a brief overview of the past quarter by Mr. Bajaj, followed by a Q&A session. So without taking much time, I now hand over the call to Mr. Pankaj Bajaj. Over to you, sir.
Thank you, Lokesh. Good afternoon, everyone. I welcome all the participants to Eldeco Housing and Industries Limited's Q2 FY22 earnings call. Let me start by giving you my brief comments on the real estate market, specifically in the Lucknow area. The demand revival of residential real estate, which was long overdue, is finally here. The pandemic played a pivotal role in this demand revival. People have realized the importance of a good house for them and their families. This is aided by low rates of interest. There are other trends being observed across markets. The desire to upgrade to a bigger and better house, the preference for a known developer brand over the unorganized market, etc. All this is translating to increased demand and increase in pricing in the market. This brings me to the other side. The increase in pricing is causing a transmission to the land markets as well. Land costs have started rising at a rate which reflects these new realities. We are seeing land prices rise approximately 50% over the last 12 months. That is after the lifting of the first lockdown till now. Apart from land, construction costs have also been rising significantly for the last 2 quarters. The cumulative effect being about a 40% rise. As I mentioned earlier, we have been able to pass on the increase in input costs to our customers due to the increased demand. But at what stage the market start resisting further price rises, I don't have a concrete view on that today. All this is getting reflected in Eldeco's performance this year, apart from the fact that the market trusts us for execution and the brand that we have built over the years. Just to refresh your memory, the whole of last year we achieved fresh bookings of about rupees 100 crores, and in the first quarter this year the number was about rupees 25 crores. This quarter, that is quarter 2 of FY22, we had fresh bookings of rupees 108 crores, which is more than the entire year last year. This is our highest ever quarterly bookings value. The bookings were aided by our new launch, Eldeco Imperia, in this quarter. Actually, we did not formally launch the project. More than 50% villas were launched within a few days, were booked within a few days of the pre-launch. All our other projects also continued with their steady performance and improved realization. I'm happy to inform you that we have applied for completion certificate for 3 of our projects, namely Eldeco Uday, Eldeco Joy, and Eldeco North Block. 3 more projects, Saubhagyan Select, Eldeco South Block, and Eldeco Laksa, are nearing completion ahead of schedule, in spite of the 2 lockdowns. I would now like to move on to this quarter's financial and operating performance. This quarter, we registered operating revenue of rupees 40 crores versus rupees 15 crores in Q1 FY22 and rupees 40 crores in Q2 FY21. The easing of pandemic-led restrictions helped us to improve the performance. The EBITDA for the quarter stood at rupees 22.6 crores, translating to a margin of 54.3%, Net profit for the quarter was rupees 16.7 crores, translating to a net margin of 41.7%. So the performance has been steady. The benefit of increased sales booking shall be reflected in future. We are hoping that the markets do not run away too much in terms of cost and price. We are conscious of the opportunities in the market and are evaluating a number of them currently. Our focus has always remained on strong execution and steady performance. Finally, in response to the suggestion of a number of shareholders and analysts, and after deliberation, the board has recommended a stock split in the ratio of 1:5. This should improve the liquidity in the stock. With that, I would now like to open the floor for Q&A.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If your questions have been answered and you wish to withdraw yourself from the queue, you may enter star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, you may enter star and 1. We have the first question from the line of Priyank Gupta from Guardian Advisors. Please go ahead.
Good afternoon. Congratulations to the management on spectacular results and very, very forthcoming commentary on future. My question is that, as Pankaj said, that he can't comment on as to how long this price run will carry on. If you can give us a sense whether they have any visibility of the volumes in number of sales, in terms of sales, for how long that volumes can continue.
So I've already answered that question to some extent. This quarter, we had the highest square footage booking that we've done. So the volumes have been great. The realizations have been even better. The big point is that there is a significant inflation which is happening on the cost side, and as of now, we are able to pass on these cost pressures to our customers. How long this continues, I can't say. I mean, I can say it's not halting in the next quarter or the quarter after that. But whether the Indian market can continue to take these kind of inflationary price pressures, I can't say. As of now, everything seems to be aligned. We are coming out of a multi-year cyclical low, and we should see an upward correction. But that correction has already happened in terms of pricing. So I can't say, frankly, Priyank. I don't have everything looks all right. But just like the seeds of this upturn was written in the downturn of the last cycle, that prices fell so much that it had to correct upwards and demand had to come back. Again, I am scared that if the prices run away too much, then it might stop. But I don't see that stopping for the next 2 to 4 quarters at least.
Mr. Gupta, does that answer your questions? So since there's no... Yes, please go ahead.
So sorry. My next question is, if the current rate goes on for let's say few quarters, do you think we have sufficient inventory to last for next 1.5, 2 years? If you can give us some sense on that.
Yeah, I think we already circulated our the presentation. There are some numbers there. So in the ongoing project, we have a sellable area of about 8.5 lakh square feet, and then we have forthcoming projects of about 1 million square feet. These are projects already in hand. Plus, we are talking about some more opportunities. That's 1.8 million square feet of inventory which we already have. So I don't see that inventory shortage is going to be a problem in the next 3 to 4 to 6 quarters.
Thank you so much, and my best wishes to the whole team. Thank you.
Thank you. Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may enter star and 1. Participants, if you have a question, you may enter star and one. We have the next question from the line of Arun Lamba from Guardian Advisors. Please go ahead.
Yeah. Hi, Pankaj. Once again, congratulations on the spectacular results and good commentary. I have two questions. One to what Priyank had just asked is that given the price rise, the inventory sitting on our balance sheet also becomes more valuable. One from a price perspective and one from a cost of construction perspective. I mean, however you want to look at it. That is one. And can you just tell us that in the other markets other than Lucknow, how are they moving since you have a fair idea about some other geographies also? Are they similar, more, less, or is it what we understand is it's a pan kind of an India trend where residential real estate especially is moving now?
So the first question is your existing inventory does become more valuable with the caveat that some of this inventory is not built. So I've included 1 million square feet of forthcoming projects. Now that is not built yet. So we are also, if we are going to take advantage of increased prices there, we are also going to face the pressure of increased cost there in terms of building that. So I hope you appreciate that part. But obviously, if both increase by 15%, then your cost as a percentage of your sale is less than 50% historically. So your margins also rise to that extent. So yes, you're partly correct about the first point. The second point, you're 100% correct that it is a pan-India thing. It is not Lucknow specific. There are macro plays at work. This is not a Lucknow specific phenomenon we're talking about here. Of course, Lucknow itself is doing very well. That's another story. But the trend that we're talking about, increase in land prices, increase in housing prices, increased demand, low rates of interest, people upgrading, people moving towards a better developer, more established track record. That's happening across markets. We have the Eldeco group itself works in a number of markets, and this is what we hear from other developers as well.
Okay, and just one follow-up question. I believe even the commercial market has come back. I know you're not so exposed to commercial, but looking at REIT performances and all and the commentary that the commercial market is also coming alive now.
Actually, the retail, we do have some exposure to these markets. The retail markets have actually come back earlier and stronger than the commercial market, the office buildings. Those are the last ones to come back. Within retail, of course, there are a few segments which are lagging, namely cinema for obvious reasons, and other intensive kind of thing. But shopping is back big time. If you go to any mall in NCR, if that is where you are, or Bombay, you go to any mall, the footfalls are back to pre-pandemic levels. Offices is still not 100% there, but it is not as bad as we thought that this is a structural change forever, and people are going to work from home forever, and the office space in the world or in our city are going to squeeze. That's not what is happening. So it is coming back, but it's the last one to come back. But the news is good on that front also. The office market is not going away anywhere.
Thank you. Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may enter star and one. We have the next question from the line of Ankur Gupta from PACE. Please go ahead.
Yeah.
Mr. Gupta, I'm sorry to interrupt. The audio from your line is breaking, sir. Could you move to...
Yeah, sure. Please.
Yes?
Yeah, sure. Now is it better?
Yes, it is. Thank you.
Okay. Yeah. Good evening, Pankaj. Am I on the call?
Yes. Please go ahead, Pankaj.
Yeah. Good evening, Pankaj. Firstly, many thanks for acknowledging the request of our retail customers. I really appreciate, and the best of luck for your team. So this is what I wanted to convey in this conversation with you.
Thank you, Uncle.
Yeah.
Keep bringing your suggestions and anything to make the shareholder happy.
Please. Thank you. Thank you, Pankaj. So that's it from my side.
Thank you. Participants, if you have a question, you may enter star and one. Ladies and gentlemen, to ask a question, you may enter star and one. We have the next question from the line of Karan Gupta from KP Synergies. Please go ahead.
Yeah, thanks for the opportunity. Mr. Bajaj, can you just walk us through a little bit about your land bank and what opportunities that the company has beyond the next 4 to 6 quarters with regards to new projects, etc.?
So I already answered partly in response to Priyank's question. We have about 1.8 million square feet of sellable inventory right now on projects which are already tied up where we have the land bank. So beyond that, I mean, it's not in our hands. We are looking for opportunities. We are confident that we'll tie up something. But shortage of inventory is not going to hold back the company at least for the next couple of years. But if you're asking me if we have visibility or we have a land bank which is enough for next 7 or 8 years, we don't believe in that as a strategy, frankly. Right now the market is high and land banks are back in fashion, but we do not believe in that. We look at land as a raw material, and at any point the inventory, the developable area that we have will fluctuate between 2 to 5 years of inventory. Right now we are at say 2.5. But we don't have 5 or 7 years, and I don't think we would ever have 7 to 8 years of inventory in our books.
Right. No, I appreciate that. It's just, during some earlier calls, you had mentioned that there were difficulties in tying up,
That's actually easing out. So you have clarified the question. That eased out a bit for us, though the prices are a little higher, but a few of our term sheets are out in Lucknow, and we hope that we should be able to close them into definitive agreements. And once that happens, we will disclose it too. Because before that, I think they're going through the due diligence process, and many of these lands tend to fail that process itself. So we hopefully will declare something in the next couple of quarters. But as of now, nothing has gone through specifically. But we are working actively on it.
Okay,
but that's an ongoing process. It's not a quarter thing. We do BD as an ongoing process, and we also do sales area. So we like to maintain our land bank to be sufficient for the next 2 to 5 years or so. We are on the lower end of the spectrum right now. We are aware of that, and we do have order on our balance sheet. We like to increase it to say 4 to 5 years.
All right. Thanks. And also, as part of your quarterly filing, you made a disclosure regarding listing on the NSE. So can you just walk me through what are the next steps? What is the expected timeline, or what visibility you have regarding that?
I wouldn't be able to. I'm sorry. I mean, the company secretary is taking care of that. I'm sure the process, whatever the NSE process is, we will file that, and whatever the process it will take, I guess it doesn't take too long. It's not a very complicated thing. We're already fully compliant as far as the BSE compliance is concerned. So whatever the timeline is, I'm not personally aware what the timeline is. It could be a quarter or 2 max.
Right. So just ballpark, like it's a 1 to 2 quarter issue, or do you think it would extend beyond that?
I'll have to come back to you. I'm not personally competent to answer that question.
All right. Thank you. That's all I had.
Okay.
Thank you. Ladies and gentlemen, to ask a question, you may enter star and 1. We have the next question from the line of Kernan Baptista from KYA. Please go ahead.
Hi. Hello.
Yes.
Yeah, please go ahead.
Okay. This might not be a pertinent question, but I was just wondering, with the new IPL team coming up in Lucknow, are there some opportunities we can explore, like with regards to housing or something, or do we have any projects near the stadium?
As things stand, we are actually looking at 3 land parcels near the stadium. Though I do think that IPL will make no difference to the local market at all. It's a 4-week thing once a year, and how many matches will happen in Lucknow? Maybe 3 or 4. So, and how do it impact the local market at all? But as things stand, that is the part of Lucknow which is actually developing very well, and we are in talks with for 3 land parcels in that vicinity, in that micro market itself. So, but it is coincidental that the stadium is there, and I don't think IPL has an effect there, but it's just it's a good part of town. So, and we are actually looking at some stuff there.
Okay, fair enough. Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may enter star and 1. The next question is from the line of Arjun Lamba from Guardian Advisors. Please go ahead.
Yeah, Pankaj, we appreciate your strategy that we don't want to be holding land for 7 years. I just want to, as a shareholder, we just want to state this. Since you did say that, I think a factory approach is a better approach, that you, whatever visibility you have, otherwise one will be saddled with high cost land, especially in times like this on the balance sheet. As shareholders, we are kind of happy with that strategy, with decent visibility, but we are not playing the land bank game. And as we have seen in the past, over the last 10 years, the land bank game didn't pan out well for anybody.
I agree, Arjun.
Yeah, that's it from my side. Thank you.
Thank you. Participants, if you have a question, you may enter star and 1. To ask a question, you may enter star and 1. We have the next question from the line of VP Rajesh from Banyan Capital. Please go ahead.
Hi, thanks for the opportunity, and congratulations on fantastic sales numbers you mentioned. My question was that, are you seeing the investors come back, or this was mostly the end users who were booking the flats last quarter? If you can just give color as to where the buying is coming from.
So one can never say for sure whether the buyer is buying for his own end use or he's buying for investment. But you can only surmise from their behavior pattern at the time of booking. And
correct, right.
We do gather from our teams keep giving us this feedback that it is the end user. They visit with their family, the children come, the wife comes, the relatives come. So that is not typical investor behavior. The other thing is that it all does not get sold in one day. They tend to visit the site multiple times before they book. And it's not that the brokers, we open booking one day and the broker will end up with this check that night itself. So it is happening fast, but we are seeing a lot of footfall on the site, which makes us believe that this is all end user demand. And people are coming out. There was this pent-up demand for good housing, and also the pandemic effect. And I think that a lot of people had postponed their decision to buy houses over the last many years, and they accumulated some savings over the pandemic, or the importance quotient of the house went up. So I think most of it is just end user demand, which is a great thing, frankly.
Right. And then my other question was, you talked about the land prices going up quite a bit. So do you think they are reaching a unsustainable level very quickly, or what's your sense on that? You said you have some term sheets out, so presumably you don't think they are getting very toppy. So I'm just curious if you can elaborate on that a bit.
So the line was not very clear. Your question is about the land prices being unsustainable? What was the question about?
Yes. Yeah, that was the question. Because
we are close to the unsustainable level of land pricing, because land prices were also stagnant for a number of years. So the real estate market tends to act in spurts. It remains flat for a number of years, and then suddenly in 2 years it will have exponential jump of 50% per annum, then remains flat. So right now what is happening is we are correcting for the stagnation of the last 7-8 years. We have not reached a level where it has gone beyond the affordability index of people or even developers, or the business model has gone out of whack. So if you look at the affordability index, even now developers are able to produce and supply and put to market houses in a price range which is affordable to a vast majority of people. It's not that, you're scratching your head that who's buying these houses and who can buy these. Sometimes it does happen like it used to happen in Mumbai in the 90s. That you would scratch your head and think that who can buy these houses. But that's not what is happening in a place like Lucknow. The price points are still say 50 lakhs, 60 lakhs, 70 lakhs, and nobody in today's day and age can say that they are at a level which is not sustainable. Land prices are rising, but not to a level that one would say that we'll have to halt our business model for some time. I think this can continue for some time, but if the trend continues, then how long, at what point the market starts resisting it, that is the moot point. I don't have an answer there. But I don't think that it is happening anywhere in the next 2 to 4 quarters. I think it is quite sustainable. Market will lapping up anything that you put out right now.
Okay. And my last question was regarding your geographic expansion. In the prior calls, you have talked about slowly investing in other territories out of the listed entities. So any update on that side?
Yes, we are, as of now, we have money on the balance sheet and we are looking to deploy it suitably and fruitfully. So we are, as I mentioned earlier, we are looking at a number of parcels in Lucknow itself, and we are also looking at some outside parcels for. The other thing is we don't want it to come into conflict with the unlisted entity. So we are looking at a geography which will not conflict with the unlisted entity at all. But the first focus remains Lucknow, and only if Lucknow is not able to absorb our growth aspirations, will we be going out. But it is under active consideration.
Okay. All the best. Thank you.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may enter star and 1. Participants, if you have a question, you may enter star and 1. Ladies and gentlemen, to ask a question, you may enter star and 1. Participants, if you have a question, you may enter star and 1. To ask a question, you may enter star and 1. As there are no further questions, I would like to hand the conference over to the management for closing comments. Please go ahead, sir.
No more comments from my side. Thank you, everybody, for participating, and I hope to see you in 3 months.
Thank you, members of the management. Ladies and gentlemen, on behalf of Eldeco Housing and Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.